Hello, good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Cheryl D'Souza. And for now, we have seen the markets have hit a fresh record highs. 78,000 has a very nice ring to itself when it comes to the Sensex. The Nifty around that 23,700 mark. And look at that stellar move on the Bank Nifty. And it's not a matter of just today. In fact, if you look at the entire series gone by, Bank Nifty has managed to eke out gains of almost 7%, and it's a solid 800-point rally. Today was the first time we managed to hit that mark of 52,000 on the index, but we did not stop there. We are now at 52,500, so a massive run as far as Bank Nifty is concerned, and it's all thanks to HDFC Bank, which is actually powering the move. It's 2.5% higher. Remember, Bernstein had come out with a note this morning, having a target price of 2,100 and saying that the next 4 years could bring in much profitability for that bank. Axis Bank is high by almost 3%. ICICI Bank is doing quite well. SBI is powering ahead. So the entire banking ecosystem is actually coming together to propel the Bank Nifty as well as the Nifty forward. Not many losers as such, Cheryl, but just select pockets which are coming under pressure. Maybe names like Tata Steel, BPCL, etc. But largely green on the screen today.
Absolutely, largely green on the screen today, and in fact, the green is much darker by the shade as we go by the hour. Actually, Anisha, because you had the Nifty that scaled past that 23,700. You had Sensex that hit 78,000 for the first time ever. A couple of stocks that are in focus in trade today, no doubt. Amara Raja Battery, that was definitely the stock of the day. At one point in time, it was locked in the upper circuit about 20% or so, and after the circuit opened, it is hovering around that 17% uptick in trade today. Apart from that, there are some smaller names that are actually moving in trade. One of the stocks is Muthoot Microfinance. It's near a 5-month high level because it got an agent license from the insurance regulator. We also have a stock like Magica World also is in focus in trade today. Kim's also is seeing a good uptick on back of stock split plan. You also have Craftsman Automation, which is seeing an uptick on back of their Sunbeam acquisition plans as well. So a couple of stocks that are in focus in trade today. Add to that list as well as Schaeffler India. This one is also buzzing in trade on back of the component launch for hybrid vehicles. So that's the way how the markets are looking like at this point in time. But let's put the spotlight on the charts. And let's bring on board Naresh Mirani to understand what's exactly happening in the markets right now. And Naresh, the way how the markets have been moving over the last 1.5 hours or so, it's kind of like a repeat of last week where you saw Nifty Bank actually take the lead, isn't it?
So, like I've been mentioning, Nifty private banks is where the real momentum is. We've not seen a all-time high happen in the SBI or the Bank of Baroda. What we've seen is clearly the momentum and leadership has shifted to the large cap private banking names. So ICICI Bank has hit an all-time high. You have Axis Bank hitting an all-time high. You have Kotak Mahindra Bank recovering, but still far away from an all-time high. And finally, the largest of them all, HDFC Bank, is just 2% away from an all-time high. So the structure is extremely positive. And mind you, banks have been an underperformer relatively right from the time of post-COVID compared to the Nifty. So there could be a catch-up play going on. So this could just be a start of a trend. So the viewers, still we have a lot more to come on ICICI, Axis and HDFC. So the structure is positive and the leadership should continue in the banking space. And we've also broken out on the Nifty Bank above the 52,000 mark. So now 52,000 remains a base and we continue to trail on to this move.
So that's the view on Bank Nifty, a breakout imminent. But let me take it across to Mahantesh as well, who's joining us on the show. Mahantesh, hi. Have to begin by asking you, HDFC Bank, we have all seen those false starts. Is this a lot more convincing this time?
Good afternoon. Looking at the banking space and looking at the way HDFC Bank has been moving up, it does appear that these false starts that we had seen for the past 2 years is now not the case. The bank is actually, or for that matter, the entire banking space is likely to do better going ahead, simply because you're emerging out of a situation where you will have a better credit growth ahead. You don't have asset quality issues anymore, and all the consolidation that you had seen in the past is done with. And we are going to enter a cycle, an interest rate cycle, which will signal perhaps easing instead of tightening ahead. All these augurs really well for the banking sector as a whole. and therefore I would say HDFC participating in that rally is something that is also coming out of their own situation. The past legacy issues of HDFC banks are no more there to handle. So it is they're riding the wave, the banking wave that we are likely to see ahead.
All right, so that's the view coming in on the private sector banks, HDFC in particular. We will try and connect with Gaurav in a short while to exactly understand what's actually fueling this rally in the private sector bank, be it Axis, HDFC Bank, ICICI Bank, all seeing good up move in trade today. But Kunal, what's your view coming in, not on the banking space, but on the defensive space? In fact, I want to ask about IT, Pharma. Are they looking much better on the charts right now? Or do you think that it's okay, you can still stay away from them?
No, I think few pockets of stocks are looking attractive. So, for example, from the IT pack, you're seeing Tech Mahindra, Infosys, TCS being stronger stocks this time around as compared to the mid-cap IT space. From the FMCG pack, I think we've seen some mild recovery coming back into the likes of Marico. There was mild recovery coming from Britannia over the last 2 days, but no major patterns which are emerging for the pharma as well as the FMCG pack. Yes, the IT stocks I believe are going through a round of short covering, but I typically sense that this could also be expiry juggling which could be happening into these IT stocks. What could probably distinguish a short covering or maybe closing of positions to maybe a start of a trend could be if the start of the fresh expiry, the July series, also sees many of these stocks getting into a added momentum as well as a continuation rally for themselves. So I think if we see that pattern, say in the first 3-4 days of the July series, then we can be establishing a point that many of these IT stocks have formed a major bottom for themselves. And we could be looking at a much more stronger trend over the stocks over the next 1 to 3 months. So as of now, I believe concentration is more towards the private sector banking names, and especially the likes of HDFC Bank and ICICI Bank, which have made a very strong comeback.
Okay, leadership clearly with the banking space. So let's delve deeper into the subject. We have Gaurav joining in to talk to us about what's really aiding and fueling the rally in the private banks today.
Well, yes, Nifty Bank is definitely one portion which is actually in focus because it has been a show stealer today. If you look at Nifty Bank, it has reached its all-time high. Even if you look at Nifty, banks are one of the leading constituents who are actually dragging the Nifty upwards, and Nifty has also reached its all-time high level. And if we specifically talk about in banks, private banks are buzzing today. And the reason being that if you look at some of the valuation metrics, where private banks have been deprived of the valuation for the last few quarters. If you look at the performance from 4th June, and if you look at the top performer, we have got HDFC Bank, Bandhan Bank, IDFC Bank, Federal Bank, who have actually been top performance since 4th June. And the main reason is that now brokerage houses are also being a little bullish on private banks. So when we talk about some of the private banks, first reason why they are being bullish is that the cheap valuation. Because if you look at the private banks, they are actually trading somewhere near their 5-year average, versus if you look at the PSU banks, like when we talk about PNB Bank, Union Bank, Canara Bank, they are trading almost double the 5-year average when we talk about PB ratio. Apart from that, there are recent upgrades that have come for private bank. So Macquarie recently upgraded target price for most of the private banks, because what they believe is that the ROE for private banks is going to improve, and it could be somewhere in the range of 16 to 18%, whereas we may see some fall in ROE when we talk about PSU banks. And apart from that, there is additional risk of ECL. Lastly, we also have earnings season coming in, and if you look at some of the past earnings seasons, private banks have already shown some stellar performance. It has been showing some growth which is higher than the PSU bank in terms of the loan book growth. So that could be one of the reasons why private banks are buzzing today. And specifically when we talk about HDFC Bank, ICICI Bank, Axis Bank, they are both gaining in trade. They're up more than 1%. So definitely watching out on how the sector pans out for investors, because this is one of the sectors which was deprived for most of the quarters, and now it seems that they're outshining the PSU banks. So definitely watching out on what happens in private banks in coming days.
Okay, so that's interesting. We'll watch out for the banking space. Tomorrow, of course, the index will be in focus on account of expiry. Today, of course, Nifty Financials goes for expiry for the month. But talking about financials, we did speak with the management of Shriram Finance. That's one of the top gainers on the index right now, up almost 3.5%. Let's listen into the management view, because they're fairly confident that they'll be able to beat the guidance of 15% AUM growth.
See, ultimately, our business depends upon the economic activity. And as there is more economic activity across urban and rural market, we should be able to grow more than 15% very comfortably. Yeah, see, basically we are looking at three growth areas. One is MSME, passenger vehicle, and the gold loan. They are likely to grow more than 20% this year. Maybe including even two-wheeler demand also could be higher. So these are all these segments which are likely to grow more than 20%, mainly because the infrastructure, what we are creating to reach out to the larger public for MSME is working out, and also in the gold.
Welcome back. You're watching Closing Trades, still hovering around those record high levels for the benchmark indices. No doubt we're a tad bit off the day's highest point, but nevertheless still holding on to the shade of green as we speak. There's some of these counters which are seeing good up move. Yes, there are battery makers like Amara Raja that are seeing a good up move, still holding on to gains of 17%. You have Garden Reach, Godrej Aggregate that are seeing good gain, especially Raymond. That particular counter is seeing an uptick once again, 6% up move coming in for Raymond, and it's been a good ride for this particular counter. Mahintesh, what's your take coming in particularly for Raymond? And also if I could actually add Raymond now to the pack of the realty stock as well, because after that, looks like there has been a re-rating for Raymond, isn't it?
So I think the real estate sector is doing quite well, particularly those which are linked to Mumbai city. You would find that among the largest or strongest growing markets for real estate past 2 years have been the greater MMR region, the Mumbai metropolitan region, particularly Thane. In the past, we used to see that the real estate markets of Delhi, Bangalore would grow fast. But particularly, we are seeing in the last 2 years, Thane has been a very large growing market. Raymond has a direct presence in the Thane market in terms of real estate projects. And even from a comparative purpose, perspective, Thane has been one of the fast growing real estate markets. So wouldn't be surprised with the kind of development we are seeing on the Raymond stock. Having said that, even the other Mumbai-based real estate companies have been doing really well. Uber Realty is another one. Godrej is another. So I believe that some of these companies exposed to the Mumbai real estate market or MMR real estate market will start tending to do better. And let's not forget that we have new metro projects upcoming now who are just about to start, which could lend a better kind of real estate growth to the greater MMR region.
Companies are coming under pressure. So whether it's Lodha, which is down 5%, Oberoi Realty taking a knock of 5%, Prestige, Brigade, all of them are on the back foot today. So some amount of profit booking after the kind of run-up that we had seen yesterday. But let me talk about what's happening in the pharma sector as well, and let me bring on board a voice that we don't hear very often of late, and that's Ms. Kiran Majumdar-Shaw of Biocon. Listen into her take with respect to the kind of uptick they have seen in the entire biosimilars business and what's the way forward for generics.
Our own generic GLP-1s are very, very interesting in terms of value creation and opportunities, the opportunities that are being created to gain very good market share, because we find that in many of these areas, the complexity of developing such products is giving us a competitive edge. This is a very, very exciting opportunity for us because we are seeing huge demand and huge growth for biosimilars and for specialty generics. And I'm very excited with the kind of the growth trajectory that we can pursue. And it's really about ensuring that we have the capacities in place because demand is growing. We are looking at good double-digit growth for the foreseeable future. And I think when you mentioned debt, yes, we have reduced debt significantly, and we are on that path of further reduction of debt. But the debt is comfortable to service. It's really about ensuring that we gain the kind of market share for our biosimilar products around the world in terms of value maximization.
Okay, so that's the commentary coming in from the management. I know Kunal is very positive on Biocon, but let me take it across to Mahantesh to get his view as well on the stock. Mahantesh, do you track this one actively?
At Biocom, so wouldn't have much commentary there. But having heard Kiran Majumdar show, yes, the generic space is something which is set to grow. But we have to remember the backdrop that some not too long ago there was a lot of pricing pressure that was being witnessed on the generic side, particularly on the in the US market. I guess that pressure is now gradually easing, and therefore you will see better growth ahead.
Let's talk to the person who has a bit of a view on it a bit more. Kunal, you've been fairly positive on Biocon.
Yeah, bullish on Biocon, and I think even at current levels, I would believe it looks attractive because the stock has not yet started a major uptrend. It's just given flashes of breakout on the short to medium term charts. But I think the major hurdle still is at around the 355, 360 mark. I think if I'm not wrong, the all-time highs for the stock is above 400 plus levels. So I would believe that eventually the stock should be able to scale past above those kind of highs for itself. The only concern which happens for Biocon on the short-term basis is the stock, at least in the last few expiries, used to get into the FNO ban, which dampens the mood or the sentiment for the stock on an immediate basis. But I think other than that, it's very strong in a bullish chart and would continue to have a similar stance on the stock.
In the last few minutes, there's a further perk up on Craftsman Automation. Apollo Tyres is actually seeing a bit of a perk up. That entire auto angs, to be honest, Amara Raja Batteries has been flying since the word go. But you also have a lot of other names, even Electra, Greentech, etc., JBM Auto. All of these stocks are perking up. And one of the reasons could be perhaps what my colleague Sumit had put on board. In terms of the budget expectation, it seems like that auto industry is also watching out for some sort of relaxation in terms of the tax burden that we have. In fact, let's take it across to Sumit to get a sense as to what the expectations are for the auto sector from this budget, and is that the reason some of these stocks are buzzing? Sumit.
Auto component sector of India is aiming for a big relief for them in the budget, upcoming budget, and they have released some of their demands. Well, this includes, first of all, increasing depreciation on assets including plant and machinery from 15% to 25% and bringing down GST rate on EV and components and battery parts from around 18% to around 5%. Well, GST part definitely comes under GST Council and the meeting decides it. However, they are still hoping for some relief in budget from that. PLI, the production linked incentive schemes, have also given overall relief to the auto component sector, and they hope this scheme will be continued and be made more flexible to give them more leeway when it comes to asking for more relief from the government. So these are the main demands made by auto component sector. And they are also saying that it will help them, the savings in GST will help them, and also in depreciation on plant and machinery will help them in making more and more capital expenditure. We're also learning from our sources in the finance ministry, some of this can be given as well, because auto component sector is a big generator of employment, gives a lot of jobs as well. That's why some of these demands could be met in the upcoming budget.
All right, so that is what the auto ang sector is demanding. But Mahantesh, let me come to you. And since we are talking about auto ancillary space, which one are you liking the most in that particular domain? Because it is quite a vast domain, isn't it? You have the ones that are into making the rims, into the wheel segment, as well as into the engines. And you have Amara Raja and pretty excited on that particular front.
So when you look at the auto ancillary space, and I do agree it's a vast space to really cover, but if you spot the trends that are happening, whereas which is coming out of how the overall automobile industry is developing, is one, there is premiumization that is happening. That means more and more people are buying higher end kind of cars, which calls for greater, therefore, content per car that is coming in, which obviously augurs well for some of the auto ancillaries. Point number two, in terms of trend number two that is coming up, is that we are seeing some kind of policy consensus coming towards junking of cars, basically doing away with old cars, and therefore that should start a very healthy trend in terms of overall automobile growth. The third trend that we are witnessing is that the overall driving the experiences of vehicles is technology driven, getting technology driven. There is a lot of integration that is happening, tech integration that is happening within automobile space, and therefore some ancillaries stand to benefit out of that. So if you want to pick of all these trends that are happening within the auto ancillary space, the trend that seems to be the strongest is the trend number three that I identified, which is linked to the increased automation and increased technology usage within the automobile space. So you actually start looking, therefore, not really in the auto ancillary space, but looking at engineering services kind of companies who are in the auto space. That should start doing really well going forward, and not necessarily just the pure auto ancillary space alone. But the auto ancillary space that can do potentially well are the ones who have large replacement markets to look forward to. Tires is one of them. Batteries is another segment which are not really OE dependent, but on a lot of replacement demand dependent, and therefore fits well with the overall growth theme that happens, which is linked to the junking of old cars, etc. So we'll look at these spaces: engineering services space and the replacement market driven kind of space.
So that's the view coming in on the auto sector. In the last few minutes, some of these home finance companies have actually seen a perk up. So Canfin Homes is up, LIC Housing, for instance, and Home First Finance. Let's pull up all of these charts and see. Yes, so in all of these stocks in the last few minutes, there has been that additional buying that has come in. Naresh, what's the view on some of these stocks? Would you be buying the likes of Home First, Canfin, LIC Housing, or any other name?
So the whole basket looks interesting because major price points are being taken out. So if you look at Canfin Homes, the stock had last time topped out at 900 almost a year back. Since then, the stock consolidated for last 10 to 12 months. And now we are getting close to a breakout about 900. LIC Housing, similarly, after that breakout about 680, 700, is now in touching distance of an all-time high, which is closer to 800. So the structure is pretty positive. Home First also, although the data is not much, but hit a new all-time high. So structurally, it remains a buy on dips, the whole housing finance sector as such. Even a PNB housing looks good.
Okay, Naresh, point taken. Those are the top recommendations coming in from the housing finance companies. But time now to slip into a very quick break. Don't go anywhere. Lots lined up when we come back.
Welcome back. You're watching Closing Trades in ET now, and yes, it is just half an hour more for the trading session, holding on to those positive levels and elevated levels coming in for Nifty Bank in particular. But which are the stocks that are seeing good price volume action today? We have Ansh here with that. Ansh, over to you.
Right, so HDFC AMC will be the first stock in focus. As you can see in the chart as well, the stock has given a decisive breakout from that downward sloping resistance, touching 3-week high, along with good volume of over 2 times its average trading volume of last 10 sessions. Apart from this, Axis Bank will also be in focus, as the stock has given a breakout from its horizontal resistance zone. In addition to that, the stock has also touched record high level with good volumes. Lastly, MCX will be in focus, as the stock has actually given a breakout from its downward sloping flag pattern, which is very positive sign. Also, the stock has surpassed above its 50 DMA, which keeps the bias very positive here. Now, these are the breakout stocks based on price volume action. Apart from this, there are high chances of Hindustan Copper and IEX getting into ban list for tomorrow. So keep an eye on these stocks.
Watch out for these names. Thanks, Ansh, for that. But shifting focus to what else is happening in the market right now, JK Paper has actually done quite okay for itself in this entire week. So that's holding on to gains. On the losing side, some of these names are coming under pressure, the likes of Happiest Mind, where of course that large trade had happened. Mr. Suta has actually sold around 6 to 7% stake, and then United Breweries too, interestingly, is down in the trading session right now. But what's clearly doing quite well is Amara Raja Batteries. That's up 18%, with Craftsman Automation not being too far behind, a 13% gain there. Sudeep Bandyopadhyay joins us on the show now. Sudeep, let's begin by discussing Amara Raja itself. I don't know the number of times, I think in the last 2-3 months I've asked this question, because these stocks are just not stopping. Amara Raja has doubled this year already. Exide is up 80%, and there are still buyers.
Yeah, absolutely. I think, look, this transition from IC to electric vehicle, I think is giving a significant opportunity to the battery manufacturers. And remember, in IC, the battery used to be one component, whereas in EV, that's going to be the most important component. And a significant part of the value of the EV will be in the batteries. So the opportunity size for the battery manufacturer in an automobile ecosystem is going up many fold. So obviously, the established battery manufacturers, which is Amara Raja as well as Excite, I think they are naturally seeing and seizing the opportunity. Of course, today's excitement is on the back of the fact that the tie-up and the technological tie-up which they have with their Slovakian investee company. They have an investment and they have increased the investment to close to 10% in the Slovakian company, and the technology which Amara Raja will be using from them will help them in aviation batteries as well. I think aeronautics batteries, and I think this is a niche, and of course it will be a high margin business. So obviously there is this excitement. Fundamentally, I believe that battery manufacturers' valuation is warranted. As you mentioned, Amara Raja has doubled, Excite has gone up by about 80%. I think the valuation is fine. It is not overvalued, I would say. Yes, it is at this stage, it is looking fully valued, but not overvalued.
Right, so that's the take coming in on Amara Raja, definitely the stock of the day today. But also just let's take a look at what's the commentary coming in from Adani Green. Adani Green is spoken to ET now. And they're aiming to grow at about 29% CAGR by 2030. Not just that, what they are saying that the key focus areas for the company going ahead is going to be efficient capital management, power storage, as well as renewable energy production as well. They're also saying they're aiming to work at very low cost of capitals in renewables, and they're going to use their free cash flow to incrementally reduce debt. And Anisha, the way how the Adani group of counters have actually bounced back yesterday, you also had Gautam Adani actually address at the AGM as well, trying to basically allay any concerns that were surrounding the company. Also saying that the company is well on track to achieve all of their targets, isn't it?
Yeah, and the fact that they're very, comfortable with respect to the balance sheet. They're saying we will do the fundraise, but only as required. They have a big capex plan. Remember, 1 lakh crore for the entire group. But they say that they're very confident and they have the plan chalked out exactly as to how that will happen. In fact, my colleague Ajay is right now in Ahmedabad, just outside the Adani headquarters, and he's been meeting a whole host of the top honchos at the Adani group. Listen in to what the key takeaways he's picked up.
Well, I'm right now in Shantigram, Ahmedabad, which is the headquarters of the Adani Group, and we had a very interesting meeting with the Robbie, who's the Group CFO of Adani Enterprises. Some of the interesting points which came out from the discussion were how the focus of the group from here on will be about predictability and longevity of cash flows. Their focus is very high on improving the return ratios of companies across the group. Also, their cost of capital has been coming down to below 7%, and the eagerness of global investors to invest in the debt at various projects is only increasing. However, one point which was highlighted by Robbie was how the own contribution of the group now in every project is actually rising, and the dependence on external capital is going down. Apart from that, the other important point which came out in the discussion was that, unlike popular belief, the Adani Group across its businesses is actually working with multiple regulators and also with multiple states. So what people mostly thinking that it's not under any federal government alone, but across states and across regulators. And hence any doubt or question of any kind actually is mitigated by that. It was actually an outreach kind of a meeting to explain the direction of the company and the focus of the management from here on. So it will be interesting to see. They are also talking about over 1 lakh crore of capex across businesses. That continues to remain a focus. But capital raising will only be done if it merits, particular projects, and the project's execution is of very high scale and caliber, and capital efficiency, the capital allocation efficiency will continue to remain the focus.
All right, thank you so much for that, Ajay. And coming to you, Kunal, among this Adani group of counters, which one actually do you think stands to benefit going ahead, at least on the charts, given the fact that most of them have seen spectacular rise, but Adani Wilmar hasn't actually lived up to it, no?
Yeah, I think there are a few names which have not performed. Adani Wilmar, I think if I'm not wrong, Adani Transmission Gas, that's stock which has also underperformed. But I think on the on the contrary, there are three names which have done exceptionally well. In fact, Adani Power was a big surprise. The stock started off late in terms of the price recovery as from the 2022 lows. But I think the stock had done exceptionally well, moving back about the 700 plus mark also very recently. I think it was in line of breaking past about the 800 levels, but it was a momentary break for the stock. Nevertheless, I think it's been a very strong recovery. But I think the two names which I would believe could probably be wanted as a buy, maybe a buy on dips also could be Adani Ports as well as Adani Enterprise. I think both these charts have also shown a lot of sturdiness for themselves. Yes, in the last 1 month, what we've seen is a missing of volumes for these stocks, and that's why you don't see any major price activity coming into these names. But I believe that it's a matter of time. Maybe if these stocks are going through a patch of consolidation, the volumes are drying out. But once the volumes start to pick up again, I would believe Adani Ports, Adani Enterprise could probably pick up pace once again. So could be good candidates of buy on dips from current levels as well.
Okay, a good buy on dips for some of these names. We'll watch out for that. But just taking stock of the frontline index and the kind of moves that we are witnessing, it's ICICI Bank, HDFC Bank, Axis Bank. The three of them together are adding almost 110 points to the Nifty on the positive side. And if you add, Reliance to it, there's a gain of almost 125 points, which has been contributed by just these four names. So clearly, it is the banking names which are single-handedly pushing the Nifty higher. But let me talk about L&T as well as some of the other capital goods names because overall these stocks too have seen a bit of a comeback, and my colleague Samir was earlier just pointing out the 100-day agenda with respect to the highway infrastructure which is expected to build up and the overall focus that is going to be there with respect to capex as well. Given that backdrop, Naresh, what's your view on L&T, Thermax, Cummins, ABB, Hitachi, all of these names of the world?
So all the other names like ABB, Siemens have actually done really well. The risk reward is no more great. But L&T looks the most interesting one because it's gone through a consolidation of almost 4 to 6 months. The stock had made an all-time high of 3,900 on the exit poll day. We've not recovered like we've recovered in the rest of the markets. And on the lower end, 3,300 has been a strong support. So at 3,500, 3,550, one can have a stop loss at 3,350 and still have a view wherein eventually the stock crosses that 4,000 mark.
All right, so that's the take coming in on L&T. Sudeep, let me get your take coming in actually on these footwear counters and footwear stocks because, nobody's talking about it of late, be it Relaxo, be it Bata or Kadam. What's your take coming in on these counters in particular, Campus Activewear as well?
Well, I think one is there is a strong possibility of some kind of PLI getting introduced for footwear and leather goods. So if that does come, it will definitely benefit the industry. It does make tremendous sense because it has a significant employment potential. So I won't be surprised if it actually becomes a reality, PLI, some kind of PLI. The second thing I would say is that while there was at least a lot of excitement in these footwear companies, if I have to pick one, probably I'll still go for Bata. The kind of range Bata has, the kind of positioning Bata has, and the kind of SKUs they keep, I think puts them in a unique position vis-a-vis, let's say, Campus Wear or Laxos of the world. And the valuation-wise also, I don't think it has gone as high as some of the other names like Campus and all had reached. So Bata can be a buy at current level for a 1 year kind of a hold. And overall, if the PLI comes, I think it will be good for the entire industry.
Have actually done quite well for a lot of those manufacturing sector and definitely something to watch out for. But what's the view on Telecom? Today, of course, Ambit came out with a bit of a buy, on Vodafone Idea. That cheered the street and the entire expectation of a hike because Somit was telling us earlier that in the last 2.5 years, we haven't seen any price hike. And now they're expecting that perhaps with auctions just around the corner, maybe today evening we'll get the details. The hike might also be imminent perhaps this week itself. Sudeep, what's the view on Telecom? Would you be investor in this name?
Well, a couple of things. One is, I think as far as this auction is concerned, I don't think there'll be too much of excitement because now auction is going to happen every year, and by and large, the players have got the spectrums they wanted. Of course, Voda needs 5G spectrum, and they may go out and try and get some of it. But fundamentally, I think the excitement around auctions is a thing of the past. And the comment that the telecom tariffs haven't gone up for a very long time is absolutely correct. Pretty much everything has gone up except telecom tariff. So it's high time that the tariffs go up. And as far as the analyst community is concerned, they have been waiting for the ARPUs to go up for a very long time. And the ARPU going up will change the margin profile of all the companies, whether it's Bharti or Reliance Jio or even Voda. So I think that's a good thing, and it's bound to happen. It will probably happen. About 20% hike can happen within this fiscal, but it may not happen in one shot. It may happen in a couple of phases, and we'll have to wait and watch. And it can happen very soon. The starting of that can be very soon. As far as the stocks are concerned, I think for an aggressive investor, Voda looks good. I know they can still go and buy, assuming a turnaround. But one has to remember that they're still losing customers. They don't have 5G spectrum rolled out. They have a lot of other operational challenges too. And the funding issue, to an extent, resolved, but it still is a very large issue looming over the company. So only for an aggressive investor, this is a good buy. For a steady play, I think Bharti can continue to give steady returns. And if ARPU goes up based on the hike in the tariff, I think Bharti will provide good returns. I'm not talking about Reliance in particular because it's a conglomerate and it's got multiple components. And of course, I do believe that Reliance also merits buying for a long-term investor.
An aggressive investor, only then you can look at Vodafone Idea. But for steady returns, yes, Airtel definitely continues to top the list. But what's the dealing room buzz today? My colleague Sharad is here to take us through that. And Sharad, over to you.
Well, yes, in focus is Bank of Baroda, and what we are gathering from dealers is buying is coming across the domestic institutions over the last two trading sessions. Now, the interest is coming in across 2 to 3 portfolio management services also. And interestingly, over the last two sessions, even the volumes have picked up. The DIs overall are holding roughly 16.3% stake in the company as well. But because of the sharp run-up, which we have seen, the 12-month target price for Bank of Baroda, as for Bloomberg, is coming in at 295 rupees per share. That means it's roughly 5% more upside potential for the next 12 months. Interestingly, 98% of the total 35 analysts tracking the stock still have either a buy or a hold rating in the stock. And recently, company came out with an important announcement that the company would be doubling their tech team to almost 3,000 by FY26. And next trigger for the company is, of course, an important fundraising activity which will happen on 5th of July on the debt front.
Okay, Bank of Baroda in focus. In fact, the entire PSU basket will be in focus. Do remember, there's a meeting today with the finance minister of some of the select public sector banks regarding certain schemes. So we are watching out for that space, and let's see what comes out of that. But for now, the public sector banks are not active. It's the private banking space, which is the one which is actually doing quite well. In fact, banking, financials, these are the themes we discussed earlier in the day with Samit Vartak as well. Listen into what his view was.
Majority of the time I have stayed away from banking segment, mainly because of the earnings growth not really meeting my expectation of closer to 25%. But I do track it very well. So historically, if you see that 2011 2019 period was a period when PSUs were in really bad shape. They had huge gross NPAs, and then they had to write off their book, and they were not in a position to lend because their balance sheet didn't allow. So it was sort of a vacuum period where private banks took away huge market share from them, right? But after 2019 cleanup, a lot of these PSUs have recapitalized. They are in pretty strong shape now, and they are back in the game. So it's very difficult now for private players to take away market share from them. And so if you look at the growth of private players during that phase, it was way better than the overall market. I think they will struggle to do that. And hence, you've seen that they have gone through a huge time correction, because I think their valuations went up and now they're correcting. So probably they have reached reasonable value level, but I don't think they can grow at the same rate at what they had grown at during that phase. when the PSUs really go through huge gross NPA buildup and they peak the cycle where now that their bad assets will really hurt their growth, that's when private banks would do well.
All right, and at the day's highest point coming in for the markets, let's actually find out from our charters what are their BTST ideas. Kunal?
So two buy calls. The first one is about ICICI Bank. That's a chart which is looking attractive again from the private sector banking lot. So shifting the move from HDFC Bank to now ICICI Bank. Targets of 1225. Stop loss could now be kept at 1175. And MCX is the other stock which is giving a breakout today above 3900 mark. So would suggest a buy with a target of 4040 and stop loss at 3850.
Naresh, what about you? What are your BTST ideas?
So first is the one HDFC AMC, good price volume breakout into new 52-week highs. Stop loss at 4050, target price of 4200. Second is the one ICICI Bank, continue to like the stock, new all-time highs here as well. Stop loss at 1185, target price of 1220.
Okay, let's pull up the intraday chart of mid-cap and small-cap indices, please, because I think they have fallen off from the day's highest point. So while the Nifty continues to build on to gains, Bank Nifty is quite solid. You are seeing a reversal of trend per se on the mid-cap and small-cap index because they are down and out and clearly underperforming the frontline index. Sudeep, do you think this is going to be the texture of the market, at least let's say till budget, that large caps and index is the one which is going to probably show better amount of moves versus the mid cap and the small cap?
There are a lot of things which are going to happen till the budget, and the volatility will be the order of the day. Number one, I think corporate results will start coming out from towards the end of first week of July, and it will be keenly watched. And by the time we sit for the budget, a whole lot of corporate results will be there with us to act and react. The second and very important factor is the fate of the monsoon, the intensity, the distribution, and the entire monsoon-related question marks will to a great extent be resolved, and that will be a very, very powerful input. So with these two inputs, we'll sit for budget, and of course, we will have to see what comes in the budget. Now, under these circumstances, we believe that the large caps will definitely be under focus and will act and react based on results which come out and the monsoon progress. We will also see some excitement in mid cap and small cap nearer the budget based on the budget expectations, which will start building up.
Right, so that's the take coming in on the broader markets, but one space definitely that has been excited of late, and it's been a while, it's not only off late, it has to be the alcohol beverage space, Kunal. Be it Radico Khaitan, be it United Spirits, all of them have actually seen good price action of late. But what's your take coming in on the progress going ahead for them? Do you think that the interest will continue to remain in the space?
Well, yeah, I think because you're seeing fresh breakouts and it's more of a consensus or a synchronized breakout for many of the stocks. Like Radico, for example, is looking quite strong. The stock confirmed a breakout above the 1800 mark, if I'm not wrong, just about a few days back. Then you have United Breweries, which over the last couple of weeks has been showing good traction. So I think except for Som Distilleries, because of its certain news flow, I think the stock has underperformed. But I think most of these stocks from the pack, they have started to do pretty well. United Spirits, I would not recommend as a buy, but yeah, I think the stock, gets into this odd habit of a very slow, gradual uptrend, whereas most of the other peers, the likes of Radico, for example, these stocks, they would tend to outperform. So I would believe that from a trading play, Radico is something which I would be bullish on from current levels, and my sense is that in this leg of uptrend, the stock could probably come back to that 1900 plus mark also.
Okay, interesting takes on the alcobev industry. But Sudeep, wanted your take with respect to some of those other sectors, let's say chemicals, textiles, sugar, etc. Have there been any niche ideas that you have looked at recently which you are becoming positive on, or something which you have booked your profits out of, or recommending that? Any changes with respect to your ideology?
Well, I think the fertilizer and agrochemical is one sector where we have become bullish. The last week's excitement was based on the fact that some GST concession was expected, and that is to an extent unfounded. I don't think GST Council has yet started deliberating on that at all, so it will take a lot of time. But leave that aside. I think fundamentally fertilizer is one space where a lot of reform measures are in the offing, and we believe that the government is consulting the industry, and there can be a lot of measures which we'll start seeing coming in the near future. Maybe some of it will be announced in the budget. I think we are expecting a good monsoon, so obviously the pickup of fertilizer volumes as well as agrochemical volumes is expected to go up. And overall, I think this industry is in a space where it was not attracting much attention. It was kind of languishing. Prices have moved up quite a bit in the recent past, but still, I think there is a lot of steam left. So, a Coromandel International at current levels, RCF even at current level for a 1 year kind of a hold does look good. Agrochemicals is one space again. I think one needs to look at. It was down and out for a very long time. The performance was nothing great, but I think things are turning around slowly. The global scenario is also changing. So, for an aggressive investor's point of view, some of the agrochemical names like UPL can be looked at. But remember, this is an aggressive position. There may be some downsides in the near future, but if you're taking a 1 year kind of a view, I think it should be a good buy. As far as sugar is concerned, there's a structural change in sugar. The ethanol blending and the related increase in the ethanol blending, I think, has created a favorable atmosphere for sugar. But sugar is an extremely volatile commodity, and one has to remember that. Recently, there was a flood in Brazil. International prices went up. The local manufacturers are clamoring for export limit hike, but the government is in a dilemma, and because if export is hiked, limits are hiked, domestic prices may go up. That may fuel further inflation. So it's always a fine balancing act as far as sugar is concerned. So in the short term, it's very difficult to predict, but long term, I think it's good for sugar industry. So EID parry in sugar can be looked at for a long term point of view.
For the spotlight then on the hospitality sector, remember that there has been no stopping for this one ever since after the reopening trade actually played, and it continues to play for the entire sector. In fact, earlier on in the day, we spoke to Lemon Tree Hotels, Patanjali G. Keshwani, who's the chairman and managing director of the company, to understand what the occupancy levels is looking like and what's the trend that they are making out right now. Let's listen into what he had to say exactly.
You can say that in spite of heat, it was, a decent performance. I'm looking at trend lines, and I expect the catch-up will happen really from Q2, when there will be improvements vis-a-vis the previous year in occupancy. If I look at the trend lines on an annualized basis, then I'm pretty sure that this year will be better than the previous year. But this quarter was not better than the previous quarter. It was roughly the same in terms of demand. I think it's a great idea because this enables you to participate on a distributed basis, on a de-risked basis, across the future of the travel and tourism sector in India. By the way, 200 billion is only 6% of GDP, and the global average is over 10% average. So I think there is a lot of growth and a big runway for the tourism and travel sector in India, and this putting it in this index, I think is a great way to participate.
Okay, that stock high by around 2.5%. For now, the cues from across the globe are not very healthy. If you look at the European markets right now, DAX is down almost 1%. The French CAC is down 0.5% as well. The FTSE is just around the flat line. And even if you look at the pre-market rates coming in from the United States, it's a mixed picture. While Nasdaq is bouncing back after the crack we saw yesterday in the semiconductor names, Dow futures are down almost 20 points, and not a big cut coming in, but nothing to write home about. But given this kind of context, and given the fact we're just at the cusp of expiry, Kunal, would you carry forward your long positions overnight?
I think it's a good time to try and at least book partial profits on the index, both the Nifty and the Bank Nifty. Of course, I think there could be a follow-through up move tomorrow after such a kind of a strong uptick for both the indices. But just because of the expiry of the Bank Nifty tomorrow, I would probably believe that it's a good time to try and at least book partial profits and then look for a mild bit of a downtick tomorrow morning. If it happens in the first half, I think it could be a good level to buy back again.
Okay, so that's about tomorrow. You don't know what will happen, so perhaps book some of the profits off the table. Thank you, gentlemen, for making time and speaking with us today. But talking about today, how's the trading session been and how are we closing? Let me take it across to Vinny for that list.
Absolutely. So we'll be closing today's day at almost the day's highest point right now when you look at it for the Nifty as well as the Sensex. Nifty up almost more than 190 points for the day, while Sensex also up more than 700 points in the day. Nifty Bank, that's the star performer today that we could highlight, 1.75% uptick, top sectorial gainer today, and an up move of more than 950 points coming in for the Nifty Bank. Let's pull up some of those Nifty Bank names. Yeah, you can see some of them are Axis Bank, HDFC Bank, ICICI Bank. All of them are among the top movers coming in, supporting the market in terms of the Nifty, specifically in terms of an up move, because apart from that, not much of an action that came in from the big names. Let's also pull up L&T as well as Infosys. That was also among the top movers and pullers coming in for the Nifty 50. L&T managing to hold on to 1.7% gains, while Infosys managing to hold on to gains of almost 1% in trade. Different story coming in and playing out in today's day for the broader market. So mid and small cap, not much of an excitement there. Nifty mid cap down almost 0.3 to 0.4% of trade. Let's pull that up. Yes, clearly seeing a decline of 200 basis points, while Nifty small cap also from the day's highest point had given up those gains and will be closing with mild gains of 0.1% in trade. Advance decline ratio today in the favor of advances, declines versus the advances is what we are watching out for. And other than that, some of the other individual names that we're keeping an eye out on. Let's pull up Craftsman Automation, that's in focus today, will be closing at highs. Other than that, Muthoot FinCorp as well as Muthoot Capital Services making the list there. And obviously in terms of the move that we're seeing for some of these other names also are a key factor to watch out for, specifically on the mid and small cap side. Let's also see some of these other movers in trade today that we had. Apollo Hospitals, that's what we're keeping an eye out on as well. That's the one that should be in focus. Crystal Integrated Services, that's also in focus today, seeing good gains of almost 6% at the end of the day, 5 to 6% at the end of the day that we're seeing coming in for the stock. Other than that, we have Apollo Tyres, Policy Bazaar, Bank of India, Indian Hotels managing to hold on to very strong gains over there. So yes, an interesting day of move. Alchem Labs, that's also managing to hold on to decent gains. Now on the flip side, when you're looking at it in terms of the move that is not performing in the mid-cap side, we have the real estate sector that is not doing well. So Lodha, Oberoi Realty, Prestige Estate, all of them are clearly under pressure. Even some of these names like Fact, that is down and out on the chemical side. We have NMDC, which is not performing well today in trade, while also something like a Deepak Nitrite. So, you know, the chemical space which saw an up move last week, not much of an interesting day coming in from the chemical side. Let's move on and talk about some of these other movers that we should highlight, specifically on the Nifty 50 front. We do have Reliance also, which is managed and chopped up in trade. Shriram Finance as well as Telecom managing to hold on to gains. So that's how the day will be closing. Nifty Sensex managed to touch those new high levels. Nifty Bank 52,000 above that mark, gain continuing, but the broader market's not much of an excitement.
If you like this video, then like, share and subscribe to ET Now.